My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with Internal Revenue Service. Welcome to my YouTube channel, the home of the 5-minute or less video. I have many subscribers, and I've got a request from one of the subscribers to answer a specific question. So that's going to be his question I'm going to answer today. By the way, I've worked over 10,000 cases. I'm a national expert in IRS representation. We have a whole team here of former IRS agents that have worked every facet of Internal Revenue Service. We have about 200 years of experience. I don't know of a firm that has more experience. We are available for free initial consultations and representation. Well, that's it about me. Oh yeah, I got to tell you really about the video. So as a former IRS agent, I used to teach the offer and compromise program. I'm a national expert in the offer and compromise, or tax debt forgiveness, as some people call it. And there are three basic type of offers and compromise I just want to talk to you today about. Matter of fact, I've got to go ahead and write that down. Three types of offers. That's going to be my next video if you want to see it. Anyway, I want to tell you just what they are quick, but I'm not going to spend a lot of time on them. The doubt as to collectability, where you can't go ahead and pay the tax. The next one is the doubt as to liability, that you think the tax isn't owed. You can file an offer and compromise on that. So those are the first two, but then there's another offer and compromise you don't hear a lot about. And there's a reason. Last year, only 3 of these offers were accepted, and sometimes they're called special circumstance or effective tax administration offers. It is extremely hard to get these through. A matter of fact, when I was a former IRS agent, I never even seen one of these. These cost, I mean, in the not too distant past, that IRS started trying to at least process these for people. So once again, let's review them. The doubt as to collectability offer: I can't pay the tax. Here's my financial statement. Will you discount it? The second is going ahead and saying, hey, the liability is incorrect. Will you take my offer and just review that my liability is incorrect? And what is it? What are the special circumstance and effective tax administration? Basically, there are some people that if you look at their financial statement, they can pay the tax. They just can pay the tax. But there's something unusual about their case that it's going to make IRS take a look, because it's a way to effectively go ahead and help IRS and help the client. These are special circumstances. So I'm going to give you an example. A person owes $30,000 to IRS, right? And a person has over $30,000 in assets. Normally, IRS will not accept that offer and compromise because they have the ability to pay the tax. IRS is not going to accept your offer and compromise unless you give them your total liquidity. But there are some cases, and I'm not going to go into a lot of them, only one. Let's say that you're old, you're elderly, I should say. I'm old. Let's say you're elderly, and you really don't have enough income, in fact, coming in. And if you gave that money to IRS, you would have nothing, in fact, to live on. That is the time you would do an effective tax administration offer or special circumstance offer, where IRS would say, okay, keep the money, we understand, we'll make a separate deal with you, let us look at your financial statement. So how IRS does this is, let's say you're 62 and IRS says, well, your mortality table says you're going to live to 82. They're going to go ahead and work out a deal where they can go ahead and get enough money from you, at least for the next 20 years only, without taking your assets, so you can continue to live. So they will figure out what your necessary living expenses are like on a monthly basis. Let's say they're $3,000. IRS will allow you to have those to be able to keep your asset, but that asset will keep funding, okay, your lifestyle until you in fact pass away through the mortality tables. They're very unusual to get these offers through. You've got to have mortality tables. You got to know what the necessary living expenses are, what the necessary living expenses IRS is going to approve, and you got to put a couple charts together to make sure this works. The year before last, they only accepted one of these. Last year, they accepted 3 of these. Remember, they're special circumstances. They're not ordinary. And most of the time, these things aren't going to go down unless you know what you're doing. But remember, IRS is going to want to know how long you're expected to live, and what your expenses are, and what your asset base is. And then the IRS will do a calculation, okay, to see if you met the special circumstances and effective tax administration offer. Like I said, they're difficult. And if you're going to hire someone for one of these, you must make sure they know exactly what they're doing. If not, you are going to go ahead and ripped off. They're very uncommon, very uncommon. Remember, I taught the offer program. So anyway, give me a subscription if this was helpful to you. We are available for representations and consultations. By the way, if you leave me a comment and you want me to do a YouTube, I probably will. Someone actually called me and asked me to do this. My information will be in the description section below. It was a pleasure. Me and my M&M man give you a thumbs up.